In this video, guys, we're going to look at the Direxion Work from Home ETF, and let's see if it's right for you, and let's see if maybe we can replicate it or do a better job and create our own. Stay tuned. Hey guys, warm welcome to you. Right, so Direxion launched a Work from Home ETF. It was the end of June actually that they did it. Of course the ticker is Wfh, why would it not be? Well done guys. And of course the ETF guys are always on the bandwagon with anything that's the latest trend, anything they think is going to gain some traction. At the cannabis ETF, solars, etc. Now ETFs are a great way of getting a quick exposure to a sector or a trend. So work from home trend, not specific sector, but it's a trend, and it kind of got cloud security there. You've got communication tools, etc., all bundled into that. I consider work from home, but it's a thing obviously with the pandemic it's being accelerated. It's a trend that's obviously been going on for a while. So an ETF is a great way of saying, hey, I think that the managers are better at doing the research and putting in the companies into the ETF than me, and I'm going to put my money with the ETF and I'm going to invest with them. Now, there's a charge when you're trading with an ETF or investing in ETF. If you're day trading, obviously it's completely different. The charge annual expense ratio of 0.45%. So if you hold the ETF for a year, you are going to be charged 0.45% to hold that ETF. So it doesn't come for free. However, you know, it's one stock if you like to buy. It's an ETF, but it's one price thing to buy. It just sits there in your portfolio. You don't have to worry about rebalancing or anything like that. It's all done for you. And these guys, Direxion will try to, and any of the other ETFs guys, spiders, etc., will try to track. In this case, it's Selective Remote Work Index. And if you go down and look at the Selective Remote Work Index and you see the top 10 holdings, you'll see them all here. Twilio, Inseego, Crowdstrike, Zoom, Elastic, Okta, Ping, Box, Fortinet, Amazon. Now, I'm not an expert on digging into companies' financials, etc. I'm a trader, price action trader. That's my thing, that's my edge, that's what I focus on. However, when you look at these, you think, is this weighted a little bit too much into security? You think, you know, for me, when I think work from home, I think Zoom, I think Slack. I don't think Twilio. Yes, maybe there is some work from home, but that's more, as far as I'm aware, someone can correct me if I'm wrong in the comment section below, it's more the SMS integration and more leveraging on SMS for various bits and pieces. Yes, I'm sure there's some, listen guys, the managers who put this in here and create this index which this ETF is tracking will have a reason for it to put it in there. But again, if you're investing, you might have these doubts as well. You might go, you know what, maybe I don't really want to have Twilio, maybe I don't really want to have so much cyber security. There's so much cyber security stuff in here, and yes, it plays a big part. Of course, you've got people logging in from laptops, smartphones, etc., all over the country. You're going to have security, but maybe you think there's other angles. Now, of course, we need to go and check. They're trying to track this Selective Remote Work Index, which is the top 10 holdings here, but the holdings of the ETF might be slightly different. So double check on the daily holdings. This opens up a little bit more, a few more. You've got Adobe, makes sense with the PDFs, etc. Alibaba, Google, Amazon, makes sense, getting stuff brought to home. You can go through and you can kind of look and go, yeah, these are the ones I like. So what you can do is create your own ETF, and you can go, right, okay, you know what, I don't think Facebook's going to benefit. Again, theorizing, I don't think Facebook's going to benefit. I really think that perhaps, you know, these headset companies like Plantronics will do better. Maybe Slack's going to do really well out of this. Maybe Zoom's going to do well out of this. Maybe you might even stick some exercise stuff in, like Peloton, any other these direct-to-consumer stuff, some of the maybe Casper mattresses. I don't know. The thing is, you can still create your own if you like. It's not an ETF, it's not going to be in. There's obviously a requirement for margin, etc., that changes, and there's some pros and cons to doing this, but you can still create your own portfolio of stocks that are going to benefit from work from home. Look what the ETF holdings have. This goes the same for any ETF, guys, happens to work from home here. Look what the daily holdings are. Go and look at the company, go and stick them on your chart as well. If you know, you can do two ways. You can look at the company and go, yes, I like what the company's doing, I'm going to stick them in my portfolio. I think these guys know what they're talking about. Yes, I think Alphabet should be in there. Yes, I think this should be in there. Or you can do another way. You can stick them all into a watch list. I've got a work from home watch list here, and you can scan through and go, oh, I only want to hold these for a year, this ETF, and so do I want to do a little bit more technical analysis on it? Maybe I don't want something, maybe I consider Zoom's too overvalued, or maybe look at it alternatively and go, hey, it's in a great solid uptrend, you know, it's kind of thing I want to hold for another year. I could see this being $1,000 a share. whatever it may be. The point is you can go a little bit more active. Now, if you're managing it yourself, if you're having a portfolio of stocks that benefit from work from home, the advantage, of course, is you're not paying any management fees. The disadvantage, of course, is you've got to manage it, you've got to adjust it. When one suddenly shoots up, maybe you want to reallocate capital, or maybe you don't. Again, maybe you want to put all your chips into a few more that are doing very, very well. That's the beauty of being a self-managed investor, self-directed investor, but taking some kind of inspiration from these guys who are sticking some of these companies in an ETF. You might be companies in here you've never heard of. There's a couple on here I've spotted and going, well, I don't know what they do. Do some research. That makes a lot of sense. That should probably be in the portfolio, because actually, if I haven't heard about them, maybe others haven't. Maybe they're undervalued. Everyone's heard of Zoom. Everyone's heard of Peloton. That's one of the reasons why they're getting pumped up. Maybe some of these companies here you haven't heard of are smaller, lesser well known, and maybe picking those is better for growth than picking some of the more well known ones. I don't know. The point is, guys, is that you can use these ETFs or this work from home ETF to create your own basket. And again, even if you're not an investor, perhaps you're a day trader or swing trader, looking at some of these are great ways to segment things off and go, hey, these are some of the main holdings in this ETF. I'm going to keep my eye on those, or I'm going to at least watch them for any kind of movement, because if money flows into the ETF from funds, money flows in from mutual funds, from even investors who aren't interested in doing all the research, well, that will cause money to flow then into the stock. It's almost like a marketing thing. Hey, Direxion are going, hey, we've got this work from home ETF. Do you want to stick some money in it? They go, yeah, money comes in. That then will then push into the stock. So knowing as well what the top 10 holdings are can also give you a bit of a head start. If you see ETFs being pumped, if you see Direxion pushing these, if you see money flowing into the ETF, that is going to, of course, have a knock-on effect to the stock. That could create a trading opportunity for you. All right, guys, that's the Direxion work from home ETF, WFH. These are some of the constituents in here. I've put them in a watch list here, but again, you're free to do that yourself. WFH been going for a while. It's pretty stagnant, really, isn't it? Doesn't seem to be doing very well compared to some of the ones like Zoom and some of the others on here. But hey, watch it. It's worth a watch. Take care, guys. Keep your risk managed. See you in the next one. Bye bye.